What's up, everyone? All right, so we're going to jump in here and we're going to talk about the action from today. And I also want to talk about what separates a hot market from a cold market, because this is a question I've noticed a lot of people asking. All right, so right now, this week was kind of a bust. Not a lot of action. It's a cold market. We're in a cold cycle. We started with, well, market holiday on Monday. Tuesday ended up having some good action, but I've been rating every day and on a scale of 0 to 10. I don't know if I should do 1 to 10 or 0 to 10, but anyways, it'll become relevant in a minute. So Tuesday, I gave a rating of a 4 or 5. We had one stock that squeezed up 120%, and I made like $3,500 on it. But if you missed that one trade, everything else for the rest of the day was pretty much garbage. It was just choppy, low quality, not very good setups. Wednesday, I gave a rating of a 1 or a 2. The gaps were terrible. It was super slow, but there were some penny stocks that were moving, which some people like, but I just don't like them. And then we had Thursday, yesterday, again, leading gappers, garbage. It was just like we didn't have any strong, obvious leading gappers. We had AGFY, even though it made, a big move, then it just got so choppy. And today, same thing. We had Spirit Airlines, Save, which I said from the very beginning, I was like, you know what? Unfortunately for me, this isn't something I'm going to trade. And here's my reasoning for this. It's the same reason I didn't trade Silicon Valley Bank and First Republic or whatever. I don't like to trade stocks that have the risk of getting halted pending news, like a high risk. And that's what I was worried about. So when you have a stock that's, we've got this merger fail with JetBlue and Spirit Airlines, and now Spirit Airlines is trying to figure out what they're going to do, there's just too much risk of a halt pending news. And I just don't want to be in something, regardless long or short, I just don't want to touch that type of stock. All right, so if we jump on to the charts here today, we can look at today in a little bit more detail. So yesterday, I guess what I would say was a 0. I took no trades. There was nothing that looked good. I would say today is basically the same. If you look at the gainer scanner, you've got 100% gainer, but this was a buyout. All right, so it's up at this level. It's just trading sideways. There's no trades there. MESA, MESA, well, it's up 58%, but, this one, again, it's a little too cheap for me. PHUN, you won't believe this, a secondary offering. They did it again. All right, so listen, this thing, first of all, it goes a couple days ago from 10 cents all the way up to 45 cents, and then they do an offering priced at like 10 cents a share. Boom, it sells off hard. Then over the next couple of days, it rallies back up. Not for any good reason, but just rallies back up. And then what do they do today? Boom, another offering. 2 offerings back to back. They are just dumping shares, unloading, raising money. And retail traders, well, we're the dummies for buying it up and losing. Fool me once, but here, they got you twice. So obviously, this isn't something that I'd be interested in just because of the price range. I don't trade these low price stocks. I really never have. The only time I trade them was at the very beginning of my career, and I lost money on them. And then after that, I just focused on stocks that were more in the $2 to $10 range. And as you know, for my small account challenge, my sweet spot is 5 to 10, because that's where I have leverage. That's where I can make the most money. So although I could trade something like this, my commissions are going to be higher because they're per share. So anyways, so no trades on PHUN in the small account or the big account. Not interested in it. So that one was off the radar. There were a couple other lower price stocks I saw people talking about. I think it was like CRGE or something like that. Yeah, this one was it. 12 cents, 26 cents. So right now, this is kind of the theme. The theme right now is we're seeing these cheap penny stocks that are popping up, but then they're failing. They're not holding up well. And I'm not interested in trading them. So I'm not touching any of those. All right, well, here's the problem. If that's what's hot right now, then that's what's obvious. It's my choice not to trade them, but I also have to recognize that that's what most people are focusing on. So if I'm not going to trade it, well, then I'm going to miss, what's obvious. And it just means that what I might look at on the scans probably isn't going to get as much attention because people are focused on something else. Attention is a little bit more dispersed. But in any case, really, you look at this scan today and it's just awful. By the way, so we just uploaded episode 3 of my small account challenge. So if you haven't checked that out, make sure you check it out. And once we cross over 10,000 thumbs up on the small account challenge series, You guys are going to help me unlock my newest piece of inventory, which is going to be replacing this monitor. And I cannot wait because this has really been like intolerable trying to, right now, I can't see with the volume. I can't even see the daily chart at all on this stock. So, I've made some progress without, as good of equipment as possible, but I'm looking forward to the upgrade. All right. So anyways, it's hard for me to see the gap scanner here, but what I can tell very easily is that the top 4 leading gappers, top 5, there's nothing here. None of this is interesting. Save 100 million share float. I mean, you guys know this isn't something I would trade. So I didn't trade today in the small account. I didn't trade in the big account. There is just nothing to trade. Okay, so now let's talk about sort of this, differentiating hot cycles and cold cycles. So someone said, Ross, how do you know it's a cold cycle and sort of what starts a cold cycle? And I said, well, let's flip that around. I think it's easier if we talk about hot cycles. So what is a hot cycle? A hot cycle is a period in the market where stocks are going up a lot. We're seeing big moves back to back to back to back. There's a lot of enthusiasm. There's a lot of FOMO. Traders are buying up anything that pops up because we've had 4, 5, 6 other stocks that made big moves. So it's like this one could be the next one. Okay. So then in a cold market, we're not seeing stocks making big moves, right? We're seeing basically these small little moves. And the result is that traders don't really feel FOMO to jump into anything because the last few that popped up didn't really do much. So then in addition to long bias traders not jumping in, shorts are more aggressive. So now you sort of have this imbalance shift where in a hot market, the bulls are really dominating the price action. And then when it starts to get cold, the bears start to take control. And then they are really in full control during sort of the bottom of a cold cycle. Anything that pops up, nobody has the confidence to buy it. It just fades. Even if it has maybe what seems like good news, people just are like, no, I'm not going to trade it. And that's where we're at right now. Now, on the one hand, you could say, oh, I should be shorting. And, you probably could make money shorting right now because you are seeing things that are popping up and you're tracing. But I want to remind you that there is unlimited risk with shorting. And we saw that with ZJYL not that long ago. The stock that halted down and then halted back up and went from it was like $20 a share to 500. But here's the thing, that should never happen in the market. It should never happen that a stock halts up at, $18 or $20 a share and opens at 500. But it does happen sometimes. It happened then, and I've seen things like that happen before. And if you're the person who's short 5,000 shares and it opens 500 points higher and you're down millions of dollars, well, it sucks to be you. That's the market. I hate to say it, but what's your recourse? There's nothing you can do. What are you going to go call there's nothing you can do. Literally, there's nothing you can do. Sue the company. It's not their fault. They don't even know what's going on most of the time. There's nothing you can do. You are out of luck. And then, of course, if you buy it at 500 and then it comes all the way back down to $10, similarly, well, there's nothing you can do. This is the market. So to me, I never, ever, ever, ever want to empower one trade to give back half of what I've made in my entire career. And the reality is, a relatively small position of 5,000 or 7,000 shares on a stock that caps up 500 points. Hello, this is a multi-million-dollar loss. I've done well in my career, but not enough to stomach losses like that. That's just, I couldn't do it. I couldn't tolerate it. So for me, I'm all about managing my risk. Now, one of the things that I'll say is that my risk tolerance has changed. And by the way, I'm petting my dog over here. She's going crazy, but I don't want to let her out right now. So my risk tolerance has changed as I've gained more experience trading and as I've gained more profitability trading. Early in my career, I was willing to take more risk because I felt like I had nothing to lose. You know what I mean? Like I didn't have a lot of money and it was like, well, I might be giving up on this thing anyways. Who knows what's going to happen? So I was comfortable taking at times really much more risk than I would take now. But now that I've built a track record, I've built profitability, I have something to lose, right? I don't want to lose everything that I've built, everything that I've grown. I've grown an account from less than $600 to over 10 million. I don't want to lose half of that in one trade. I couldn't possibly. So I would say that as I've matured as a trader, my risk tolerance has gone down. And now I'm really focusing on where I can make money, but without risking doing something really stupid. So anyways, while you could short right now because we're in a colder market, you still have to be careful about that. And for what it's worth, shorting a stock at 10 or 25 cents, the most you could ever make is if this goes to zero. And it's pretty darn close to zero. So like your downside feels like a lot more than your upside potential. If you bought a stock at 25 cents, your downside is that it goes to zero, but your upside is like sometimes we see these things really take off. And so usually a cold streak ends when everyone and their grandmother is shorting stocks because it's easy. Oh, this is easy. You just short everything that goes up. And if you keep adding, it's fine because it'll go down. And that works and works and works until it doesn't. And when it doesn't, it blows out a ton of beginner short sellers. They literally blow up their accounts. They have margin calls. They're in debt to their broker. They're out of the market and they're gone forever. And you have a stock that goes up from 40 cents to $10 or $11 in one day. And I've seen it happen before. And it's insane. And that big move sparks the next round of momentum where all of a sudden it's really hot. Now, how long it top for can be days, weeks, months. We never really know. It kind of depends on the price action on the following days. And there's a number of different factors. But my feeling is that in my experience, about 80% of my profits on the year come from about 20% of the days. So my job is to show up here and be willing to trade, be willing to be aggressive, because I just don't know what day is going to be the hot day, right? So I just have to show up every day, and that's what I do. I show up ready to trade, ready to be aggressive. And, you know, with a short seller strategy, I do see some short sellers who throw down some really good consistency. You know, they're shorting everything that pops up. They're adding, and then covering. And then you have those black swan days where in one day, you know, they get short something at 50 cents and then it goes to $1 and they've added the whole way up. And now they're in a full size position as something is going, you know, multiple dollars a share against them. And just think about, you know, where that'll land you. So anyways, you know, there's a part of me that at times is tempted to trade more to the short side because look, you know, when you see a lot of these stocks doing round trips and things like that, you feel like, all right, I want to try to participate in that. But my risk tolerance right now just will not allow me to do that. It is not worth it. You know, yes, it would be nice to have, you know, 20 base hits in a row or whatever, you know, this nice steady progress. But this is what I see with these short seller accounts. They go like this, and then they lose it all in one day, and they're in debt. And then, you know, maybe they make it back, and maybe they start getting better. They cut the loss faster, but you still have that kind of strategy. It's a tough one. Long bias traders, in contrast, tend to be a bit more, you know, like this, and then like jumps up, and then kind of like this, and then sort of jumps up. And it's sort of like this stair-stepping pattern of like being patient, grinding it out, showing up every day, collecting the small wins, and then being there, you know, for the 20% of the time that we have big opportunities and your account can really make a big jump. So today, unfortunately, there was nothing that I felt like is going to even give me a solid base hit, let alone, you know, a really nice trade. So it just didn't make sense to take any risk. This market wasn't deserving of my capital is how I felt. You know, I'm not going to participate in this market. So what also happens in colder markets is liquidity dries up. It gets very, very like it's illiquid. And that's hard whether you're long or short because it's hard to get in, it's hard to get out. There's no one trading because, you know, people just sort of are like, no, I'm not participating. So it's a lot of algos and, you know, a few diehard traders, but it's a lot less volume in total than during a hot market. So naturally, I'm looking forward to when the market heats up. It's pretty unusual for January to be as slow of a month as it's been, but, you know, market is cyclical, hot and cold cycles. They don't always tie back to a season. So right now it's a little bit cold. I suppose the good news is that the overall market has been quite strong. So for those of us who have been trading for quite a while, like me, you know, I've got $100,000 in my trading account, and then the rest of that $10 million in profit, I put away long-term into the market. So that's been in the market growing this whole time. In fact, I made more last year on that long-term account than I made on my day trading. And I'm fine with that. Some years it's going to be like that, you know, and that I said early on, I say it in class 1 of my Warrior Starter curriculum. I said the goal of trading is to essentially fast forward your retirement savings. Because with a relatively small account, as I've proven with $600 or with 1,000 or 10,000 or even 25,000, I can trade and grow that money so fast. But someone's like, Ross, if you could turn $583 into a million, in 2 years or whatever, why can't you turn 50,000 into 100 million or 500,000 into a billion or something like that? And it's because there is a limit to scalability in the market. You cannot day trade with, 500 million shares every single day getting in and out. It's just not possible. And that's what you would have to do to be able to have that exponential growth in terms of the return on the $500 account that I had, to have that with like a $500,000 account. It's just not possible. But what I am really good at is producing profits relatively quickly with small accounts. And that's base hit, base hit, base hit, base hit. And I said the right thing to do is to take the money out of that short-term account and push it away to the long-term account. And that's why doing it in a retirement account, a Roth IRA, is so smart. Because if you just do standard contributions to a Roth, even if you maxed it out at $6,000 a year, over 10 years, you would contribute $60,000. $60,000 in 10 years. Okay, that's good. And in 10 years, you would already be growing from the initial deposits, compound interest. So maybe you'd be up to like 80,000 or 90, something like that. So it would be growing, but that's 10 years of contributions. I did 3 years of contributions, 6,000 once, twice, 3 times. From there, I started day trading in that account. And obviously for the first month, I could only day trade 3 times a week because it was below 25K, but I just kept trading in it. And I grew it to over $1 million. And then I kept trading. And then we had GameStop and we had all these big movers and I made $5 million in it. And I just kept trading and I'm still trading in it. So, it's one of these things where I was able to really turbocharge my retirement, and all of those gains are tax free. I don't know anywhere else where you would be able to do that except for actively trading the market. So for me, I right now have about $100,000 in my day trading account, and then the rest of that profit I put aside into my long-term account. And look, there are going to be some years where that long-term account goes down because the market goes down, and that's what happened in 2022 or 2022. And then there'll be some years where the market goes up and that account goes up. And I said, eventually, if you pay your dues at the beginning of your career, your first 3 years, your first 4 years, your first 5 years, and you take the excess profit that you have that you don't need for cost of living to live on, and you put it away into long-term retirement, you put it away, you put it away, put it away, you will get to a point where you're making more each month and each year on compound interest and on growth on that big account than you could possibly make day trading. So, for real though, let's think about this. That $5 million, that $6 million that I have in the Roth IRA, so the rest of the 10 was in a taxable account. So I paid some tax on that. But the Roth IRA is like $6 million. All right, so now that account just gets to grow and grow and grow and grow. So in 15 years, it could be 12 million. In 30 years, it could be 25 million. In 40 years, it could be, 30, 40 million. That account could just keep growing and growing and growing, tax-free, okay? Compound interest is on your side if you start early. And this is a lesson that I learned certainly, from family, a penny saved is a dollar earned, but from my neighbor, Mr. Reed. Now, I've told the story about Mr. Reed a million times, but it doesn't hurt to say it and to share it one more time. So Mr. Reed, let's see, I'll find the article, Brattleboro, Vermont. Mr. Reed grew up in Brattleboro, Vermont. And, there's actually a, that's interesting. There's a, he has his own Wikipedia, but we'll put this up here. All right, so after a life, oh my God. So no, I'm not gonna turn my ads on for you. I'll do Wikipedia. It's not my favorite, but it's fine. All right, so there's Mr. Reed. So Mr. Reed, born October 23rd, 1921, and passed away June 2nd, 2014. He accumulated $8 million. $8 million. He gave it to the library and to the Memorial Hospital. And he did that by investing in dividend-paying stocks. And he started doing that at a very young age. He worked at a gas station in Brattleboro, and then he was a janitor at JCPenney's. And so they call him sometimes a janitor who made, $8 million. But he had 90 years or whatever it is. Well, probably 70 years because he's probably started investing like in his 20s. So, this is like 70 years of compound interest. This guy never made big salary. I don't think he probably ever made a 6-figure salary. So how could someone who never made a 6-figure salary make that much? He had the benefit of time. He invested in the market long-term, and he had the benefit of time, compound interest. And that's what it is. And so we have that opportunity as active traders. We really do. You know, we can trade every single day. And when we have some excess profits, we can put it away. And I really encourage you to do it because it's going to be saving that money for a rainy day. We will have slow months. We will even have slow years. And so the earlier you start putting that money away, you know, the better off you'll be. All right. So anyways, it's something I'm a big advocate of. I teach you how to do it in our classes because I think everyone should be doing it. And there's a huge opportunity there for you. So anyways, today I felt confident saying, no, I'm not going to take any trades. And hey, you know what? That money I made, you know, over the years, that's working hard today. And I'm sure if I logged in, check the account, it's going to be in really good shape today. Now, I don't log in and check it daily because I don't really want to, but I'm sure, you know, there's a silver lining there. So I will be happy to come back on Monday morning. Hopefully we see a solid gap scanner, but I'm going to be picky. And I'm going to be picky in my small account too, because being picky and focusing on A quality setups is the right way to grow a small account. And then once the account gets big, you can get a little sloppy and trade a little bit of everything. But in a cold market, you'll get punished for doing that. So, you know, when it's hot, I'll start trading a little bit more of everything that's moving because things are going to be more forgiving. But when it's cold, this is the time that teaches discipline. And look, I made a mistake this week. I had a good day on Tuesday, and then I gave it all back on Wednesday on those trades on DWAC. So I'm finishing the week down $2,500, 2,500, right? I was up 3,500 and then I was down 6,000. So down 2,500 on the week. All right, it's a red week. I'm not happy about it, but I'm not going to spiral. I'm not going to let it get worse. I'm just going to sit here and now wait for an A quality setup. So nothing today was worthy of me, you know, taking on the risk and taking a trade. So no trades today, but I'll be back at it first thing on Monday morning. And I hope you guys, if you haven't already checked out episode 3 of my small account challenge, check that out. And I'll see you guys back here bright and early on Monday. Enjoy the weekend.